In this video, we're going to go through Binance Dual Investment. This is actually an amazing way to earn some really good yield on your portfolio and some passive income, but there are some things that we need to know about before actually choosing to go into this dual investment. So I'm going to go through what dual investment is, what the underlying products are so you can make a decision whether it's right for you, and then how to actually go ahead and invest in this product and earn some passive income and yield and everything we need to think about. Timestamps for all of that are in the description below. If you don't have a Binance account yet, I'll leave the link below and you can sign up for an account and follow along with me. So come over to Binance and then come up to the Earn section and you'll see Dual Investment here. This is on Binance.com. Like I said, click the link in the description if you want to sign up and come and use this. You can actually look around the platform for free without trading. But what we have here is we have to choose an asset, and then you can see these crazy yields you can get on your assets, from 4 to 165% on Bitcoin. How on earth do they pay this? And where is that coming from? Well, really, I'm going to explain what it is that we're actually doing in this video. But what we can see here is that you can invest either a coin like Bitcoin, Ethereum, BNB coin, or you can actually invest US dollars as well. So you can actually see sell BTC here or buy BTC here, and you can choose dollars or BUSD. So that's actually two different products. So I'll very quickly explain the difference between them now. So what you can see here is invest USDT or BUSD. So here you actually take dollars or a stable coin and then invest for some yield. And there are two outcomes here. You either keep your dollars and earn your yield, or you actually buy Bitcoin but still earn your yield as well. And so there's two outcomes, and so you need to be aware of that outcome before investing. But what you can see right here, and this is on the Binance website as well, is that we have a target price. That's really important when entering into these products. But very simply, you choose how much you want to invest in dollars, and then there is a target price in the coin that you're going into the product for. So in this case, it's Bitcoin, but it could be Ethereum. Then you have a settlement date. These are all really important because the subscription amount, the target price, the settlement date, that is all going to reflect the yield that you get and potentially either swapping your dollars into Bitcoin. But you can see the subscription amount that you can choose, and then the yield that you get, and that is dependent, like I said, on the target price and the settlement date. And then you can go ahead and do that. The other way is actually to earn extra passive income on the portfolio that you already have. So for example, if you own Bitcoin or one of the other coins that's available, you can use these, put them up, and then earn some passive income on them. Again, it's the same sort of thing. You have a target price here that you need to choose, and then that target price determines how much yield we can get. So you have a subscription amount in the coin, the target price of the coin, that's actually a contract, and I'll show you the differences in a second, and then the settlement date. So it's the same type of contract, you're just either using dollars or coins that you already have, and then that will determine the interest rate that you see. When you come over here and you choose a particular asset, I'm just going to take it off beginner mode right here, you can see step 2 is to choose all of these different prices and which one that you may want to go into. The different prices have different yields and APYs, and I'm going to explain why that is right now. So actually what dual investment is under the surface is an options contract. So you're actually entering into an agreement with the other person in the market to do something in the future. This is a typical options contract where essentially you are giving the other person the option to buy or sell you Bitcoin. And so they pay something called a premium to you for the right to do that. And so those premiums that we get, they are our yield, and they can be, very, very lucrative. If you have, Bitcoin on your account, you can just take all of the fee, what we call the premium, and get that straight into your account. But there are some risks. But a premium is something that you receive when you write an option. And that's exactly what dual investment is. We are writing an option. We are giving someone else the option to do something. So when you write an option, you actually receive a premium. That's basically just a fee that is paid to you because they are entering into a contract with you and they have the ability to sell you Bitcoin at a specific price or buy Bitcoin from you at a specific price. The fee that they pay is our yield, and you can see the flow right here. So we are actually the options writer. So we are that person, and we are giving someone else the right to do something in the future, the option to do something in the future. And for that, they pay us a premium. That premium is our yield. Now, options are really complex, but what I'm going to do is show you how to use the beginner mode on Binance first, because it's very simple and you can just make a very simple decision on what you want to do, plus the coin that you have right now. And then I'll explain exactly what the underlying contract is after that. So if you come to the dual investment screen, and you can see beginner mode right here, I'm going to show you on the platform. It is on the app as well. But there are really two options. So if you have Bitcoin and you want to earn passive income on it, then you can enter into that type of contract. Or if you have US dollars, like US dollar Tether, and you want to earn some passive income, then you can do it with that. So we're going to choose BTC to begin with. And then getting started right here, Binance make it really simple, where you can sell BTC. Now, if you have Bitcoin, this is the option that you have to choose, of course, because if you have BTC, then you can't, there's no point buying BTC with BTC. So what you're doing if you have Bitcoin and you want to earn some passive income on that is essentially you are giving someone the option to buy Bitcoin from you at a price in the future, and that's the settlement date. Now, you may not want to sell your BTC, and so that is a risk of this, is that what we can see at this specific moment in time, you can see right here, is that the current price of Bitcoin is 30,079. Now, what you're doing if you enter into this is giving someone the option to buy Bitcoin from you if the price reaches 34,500. Now, if you believe that that is just not going to happen by this settlement date, then you can enter into that contract and you can earn 4.27% APY. Now that's an annualized figure. You don't earn 4% from this. The amount you earn is probably, 0.5%, 0.3%, something like that. But obviously they take it as an APY. So if you think that the current price, 30,000, will not go up to 34.5 by this settlement date, then you can enter into this contract and earn 4.27%. Now, if we get into the non-beginner mode, it's exactly the same thing, but obviously we'll go through that in a second. But you can see all these different prices here and the different APYs, and there's reasons for that. But I just want to explain first that essentially if you have Bitcoin and you think the price won't go up, you can earn that yield and keep your Bitcoin. But the risk is that if the price does reach here or above, they will exercise the contract and you will have to sell your Bitcoin to them. Now, the opposite side of that is if you have dollars and you want to earn yield on dollars. But obviously the downside of this is if the price reaches a level where the other person wants to sell you Bitcoin, you actually have to swap your dollars into Bitcoin. So if we go to buy BTC, you'll see that we change here to now either using USDT or BUSD. So they're the dollars. Either one is, basically the same. But what we're doing right now is saying to the other person, I am willing to buy Bitcoin from you at 22,500. And in return, they will pay you the premium, which annualizes out at this settlement date at around 6.76%. So if the price goes below 22,500, you will have to buy at 22,500, a little bit worse price, right? They'll sell you their Bitcoin at that price. But if the current price stays above 22.5, they of course won't sell you their Bitcoin. You will just keep the premium and keep your US dollars. Now I'm going to go through the professional mode and some of the options that you can choose because they are very different. You can choose different settlement dates and target prices, and the APYs change. So I'm going to go back to owning Bitcoin and trying to earn passive income on the Bitcoin. So we've got BTC here, and then the step 2 is to choose the target price. And you can see that the target price changes from 3,500, and then we're actually getting wider out right here. Remember that if you have BTC, what you'll be doing is giving someone the option to buy that Bitcoin from you in the future. And what you can see is that the closer that the target price is to the actual current price, the APY is higher. Why is that? Just imagine giving someone the option to buy Bitcoin from you at a price that's lower than the current market price. They'll have to pay you a big fee for that to make up for the fact that you're selling it at a discount. But if the target price, as we come right down here, is what, 10% away from the current price, it's less likely for that to happen. They are less likely to exercise that option in the future because this settlement price that you're agreeing is further away from the actual price now. And so they're not going to pay a fee to actually go and execute that. Now, there are some people that want to do that, but they're going to just pay a much smaller fee because the likelihood of the price getting there is much lower. So let me explain exactly what writing a call option is so you can see it in graph format. This is the other person right here, and this is what they're doing. They are buying a call option from you, and they are paying the premium. Now, let's say they buy the call option right here. So they buy the right to buy something at $100. Now, they don't make money until the price of that asset goes up to 100 plus the premium that they paid you, because that's their total cost. If the price goes above that, then they can exercise the option, buy the asset, and they can sell it straight away for a profit. So what they're doing is essentially betting on the price going up. That's why they are buying a call option, because they're buying the right to buy it from you. And if the price is below this, they will not exercise the option at all because it's a worse price. You get to keep the premium. This is what we're doing here. We're writing the option. We're giving them that option. Now, our profit is essentially the premium. So we have this right here. This is our premium that we get, right? So we get that premium the whole time. Now, if the price keeps moving up, you can see our premium actually gets kind of taken away right here. And we actually not lose money, but if the price moves up above the settlement price, we actually get a worse deal overall because we have agreed to sell Bitcoin at, for example, 30.5. And let's say the price in the market was above that at 32. We have now got a worse deal. So we're giving someone that option. They're paying us the premium. But of course, we have the detriment that if the price does go up above the call option price, then we have to sell them that Bitcoin at the lower price. So there is a risk here. So if we press subscribe, it will give us a box where we can see all of our inputs and actually see this in real time. So obviously the subscribed amount, if you have Bitcoin that you are willing to sell at a certain price, so say 100, then it's going to give us all of the returns that we can see. So if the settlement price is at or above 3,500, you can see right here, this target price, we will have to sell that Bitcoin. We will receive BUSD plus our premiums. But the only reason they will exercise that is if they are getting a better deal. So we will get a slightly worse deal for selling our Bitcoin, and we have the risk of having to sell our Bitcoin. If the price doesn't reach that, we keep our Bitcoin and we receive the yield as well. So that is essentially having the option to sell your Bitcoin at a certain price. If you want to do that anyway, then that's great. If you think that the price has no chance of getting above the target price, then you can just keep the BTC and start earning that yield. Now I'm going to show you using US dollars, and this is when you are willing to buy BTC or another coin and you want the premiums as well. So if you're looking to maybe pick some Bitcoin up, but you're looking to also earn some yield, this may be for you. So what you can do is change over to USDT, BUSD is the same thing. And then we have these target prices. Now, what you can see, obviously, is that the target prices are lower than the current price. And this makes sense as well, because what you're doing is giving someone the option to sell you Bitcoin. So you're saying that, if the contract is executed, you are going to be buying BTC, but you always get the APY, but you may possibly not get the BTC. It depends on the settlement price and then what the price is in the market at that time. So if you press subscribe and then choose an amount right here, what we can see is that when the settlement price is above 29,500, you can see what happens here. You actually just receive your dollars back and the premium. They will not execute because they have, with this, the right to sell you Bitcoin at 29,500. And if the price is above that in the market, they're not going to sell at a worse price than the market. But if the price is below this, then they will sell you that Bitcoin because you have to buy it at 29,500. And let's say the price in the market is 28, they're going to be getting a better deal. You will actually receive that Bitcoin. So this option with dollars is good if you want to buy Bitcoin anyway, and you're looking to lock in and make a price that's certain, but you also want some yield as well, you can use this option with the dollars. To show you how this works under the surface as well, this is what's called writing a put, which is giving someone the option to sell you Bitcoin. That's called writing a put. Now this is what the other market participant is doing. They are buying the right to sell you Bitcoin at a certain price. And so this is the strike price right here. And of course, they are giving the right to sell you this, right? So this is our premium right here. Now, if the price is higher than this, they lose their premium because they won't execute. If the price is way lower, obviously they start making money because they can sell you it right at this price right here, the strike price, and the actual price in the market is lower. So that's when they make money. For us, what we're doing is writing the put or giving them the option to sell us the Bitcoin. If they don't sell us the Bitcoin, then we get all of that premium and our dollars back. If the price comes down here, then we have to buy that BTC, and we are getting a slightly worse trade than if we had have waited, but obviously we don't get the certainty if we wait. This gives us the certainty. And so you can choose, if you're looking to buy BTC anyway, then you can choose to enter into this. If you want to know more about how I invest in crypto and earn some passive income and yields on my cryptos, I'll leave my crypto investor course linked in the description. If you want to come to the public Discord server as well, I'll pin that as a comment. Also, Binance link down there as well if you don't have an account yet. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.